Hi, my name is Darren Joseph from HCJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Mark. Mark, would you like to introduce yourself?
I'm Mark Morris. I'm based in Zurich. I've been here for nearly 30 years, and I've exclusively devoted myself to automatic exchange of information since the year 2000. And I've been consultant to the EU Commission, the EU Parliament, the OECD regarding automatic exchange, as well as consulting for Tax Justice Network and various other parties. And I would say today, after 25 years, I'm the only person in the entire world that is promoting structures in 4 or 5 different territories that nobody seems to touch. But we'll go through those territories today.
Fantastic. Now, in a previous video, we spoke about Saint Helena in general and your visit there. But could you comment more specifically on why you believe it may be ideal to incorporate into an international wealth protection or wealth planning structure?
There are many reasons for this. First of all, it's got a high reputation as a full-fledged British overseas territory, equivalent to the other BOTs and dependencies. There's no, you're lower down, you've got less dependency, less laws. No, it's a full overseas territory. It has not implemented any automatic exchange of information because people just forgot about it, or there's no international business so far. There's no CRS, FATCA, or CARF. It doesn't have any double taxation agreement, which is strange because even the Falklands has got a DTA with the UK, but I think that's to do with the oil business. There's no exchange on demand. There's no spontaneous exchange. Now we get to the interesting parts, because I had to meet the chief magistrate and the registrar, and nobody really knew these answers until I met many people in the government, because the companies can have 100% non-resident shareholders. And more importantly, companies can have 100% non-resident directors. All you need is a registered address, not even a registered office, because they never adopted BEPS actions, and therefore economic substance doesn't exist there, where you need an office and staff and so on. Now you're beginning to pick up why I like Saint Helena doesn't have all these. So there's no BEPS, for instance. You can't fish for tax treaty, the best tax treaty. There's no global minimum income tax for large multinational enterprises. And then, so you, as I said, you only need a registered address, not a registered office. Now we get to some more important things. Although they're not a tax haven, which is good, they have territorial tax. So there's no tax on income that's earned outside, and it's pretty easy to define your income is outside if the management is outside, and you're obviously not going to use the one and only Bank of Saint Helena to hold your assets. You're going to be using Swiss, you're going to use Singapore banks, etc. It's not subject to a penny tax, no wealth tax. So the domestic tax is subject to 26% tax. So you get a tax identification number. For instance, with the BVI, you don't get one. And then you've got to put on the self-certification, I don't have one because they don't issue one. That is why banks are saying, toodaloo, goodbye.
Right.
So it's not regarded and doesn't have a reputation as a tax haven. I prefer this territorial tax rather than nobody pays tax. Now, there are other countries in the world with territorial tax, for instance, Hong Kong, but you try use that, and they're going to come back on you and say, prove that you made all the decisions outside of Hong Kong and you need a local director, and they're always going to zap you as, sorry, you've got to pay your 15-17% tax because your decisions, your meetings, none of that's asked in prove your meetings, okay? It's a low cost to establish and maintain. I think there's something like a £80 cost to set up the company, okay? The only cost, and that's something that I negotiated, is the office, the registered office, because that everything relies on that. So I looked at all the registered office costs in all the other territories, and I saw they ranged from 2,000 to 6,000. So it's one of the most important businessmen, well-known businessmen on the island, which the chief magistrate and the local solicitor and the registrar said, use this guy for your office. So who am I to say no? And we decided to pay him £2,500 to forward all the contact and the details and the information and the request coming from the local office. Okay, so that's really the only expense to hold it there. I think the annual, £80 plus this local register office. So the low cost to establish and maintain. You tell me what it costs to maintain a company in the BVI or Cook Islands. Okay. Mm-hmm. They don't have any trust law, and I don't think they ever will. And so the beneficial owner of a trustee-owned company, they follow the UK in PSC, the Person of Significant Control. And so the beneficial owner in their register, which is not publicly accessible, but as you see, the UK is leaning on all the territories to have publicly accessible. But the PSC of a company owned by a trust will be only the trustee, as is in the UK, not the settler, not the beneficiary. So there's no tax haven reputation. It's quick and simple to incorporate. Takes 2-3 days at most. Okay, so I've got a letter from the tax commissioner saying that trusts are not taxable if beneficiaries are non-resident. So I foresee the use of Saint Helena as a corporate trustee rather than the underlying company, because if you use it as an underlying company and it's an investment entity, investment entities that are not participating in CRS are treated as a passive NFE and therefore looked through. Yeah. So for me, the ideal corporate trustee is Saint Helena. Now, the director doesn't have to be in Saint Helena, okay? The director of the corporate trustee could be in Svalbard, could be in Falklands, could be in the sovereign base areas, etc. Therefore, the corporate trustee will be located in one of those countries which don't have CRS or FATCA rules. Okay, I'll discuss FATCA planning later on because no money is being paid to these corporate trustees. Therefore, they don't have to register for a GIN, and therefore there's no 30% withholding or recalcitrant reports or forcing of company clients to close their accounts.
This is quite interesting. Is there like an annual audit requirement, or doesn't exist?
Yeah, but not if your income is extraterritorial.
Okay, right. That is quite interesting. And similarly, if there's no domestic economic activity, there's no need to submit financials, or do you need to submit annual financials?
Nothing. No, okay. You just claim that you are non-territorial, and they see that because your management is non-territorial, is not domestic. And the shareholders are obviously not domestic. So nobody's benefiting from the company there.
Okay, great. Thank you. Mark, if someone wanted to get in touch with you, what's the best way to do so?
As I travel a lot, the best way to get hold of me is via my website, co-ownershiptrust.com. And then you can email me or try to get hold of me by phone, but that depends on the country that I'm in. If they've got cell phone coverage, I go to some really remote places in the world, Falkland Islands, Saint Helena, etc. So the best is via my website.